Hello friends, let's continue our discussion on income from capital gains. We have seen that capital gains are computed by taking the sale consideration and reducing the cost of acquisition of that asset. Now before coming to the taxable capital gain, certain exemptions are available. Now today let us examine one such exemption available for the sale of a residential house. Section 54 of Income Tax Act deals with this provision. Certain conditions need to be satisfied to claim this benefit of exemption. That is, first, the benefit is available only to individuals and HUFs. Other forms of taxpayers like firms and companies are not eligible to claim this exemption. And the asset that is being sold, that is the residential house, must be a long-term one. That means the residential house should be held for at least a period of 24 months. Okay. And the building that is sold, as I said, must be residential house which is used for a purpose of residence. Okay. And income from this should be chargeable under the head income from house property. Now, what is the meaning of this? Income from this house, say rental income, must be taxed under this head, that is income from house property. Suppose, say I have a residential house which I use it for running a paying guest accommodation. Now, this activity of running a paying guest accommodation may be a business. So income from that rental from that house would be a business income, and it will not be accessible as income from house property. Therefore, in case that house is sold, so the seller will not be eligible to claim this exemption under section 54. Coming to the exemption, reinvestment should be made to the extent of the capital gain. That means whatever capital gains are derived by the sale of the house must be reinvested. Suppose I sell a house for say 50 lakhs and capital gains are 30 lakhs. Now I have to invest minimum 30 lakhs to claim the benefit. And the reinvestment should be in another residential house in India. And this reinvestment can be either purchase or construction. So in case I go for purchase, the purchase can be made either 1 year prior to the date of transfer of the house or 2 years after the transfer or sale of the house. Or if I go for a construction of the new house, then the construction should be completed within 3 years from the date of transfer of the house. Now recently an amendment has been brought in to allow a certain benefit like reinvestment can be made in two residential houses instead of one house. Okay. This is only if the sale is made after 1st April 2019. In other words, any sale of a residential house subsequent to 1st April 2019 would be eligible for this benefit. That is, I can reinvest the capital gains in two residential houses. All the sales prior to 1st April 2019, the benefit can be claimed only if it is invested in one residential house. Now, as far as the new amendment is concerned, benefit is available if the capital gains do not exceed 2 crore rupees. And this is once in a lifetime benefit. That means suppose I claim this benefit in this year. So this year I reinvest in two residential houses and claim the exemption. Later on, after 5 or 10 years, I sell one more house. Then at that time I will not be able to claim the benefit of reinvestment in two houses. It will be restricted to only one house. Now, quantum of the exemption would be the amount of capital gain that is invested in the new asset or new house. So if the capital gain is more than the reinvestment, then the excess amount is brought to tax. Now, for example, capital gains are 30 lakhs. I reinvest in another house for 25 lakhs. So balance 5 lakhs is taxed as capital gains. On the other hand, if the capital gain is either less or equal to the reinvestment made, then obviously there will be no capital gains. Now, to claim the benefit of the exemption, I have to either purchase a house or construct a house, new house. Now, and I have to reflect this position in my return of income. Suppose I am not able to do this when I file my return. That means I cannot buy or construct a house before I file my next return of income. It may take some time. Therefore, if I am not able to do so, then I have to deposit the amount of capital gain in an account called capital gain deposit scheme with maybe nationalized banks, okay, and furnish the proof of making the deposit with the return of income. And all the withdrawals for the purpose of reinvestment, that is either purchase or construction, must be through this account only. Now, to give an example, suppose I sell a house in December 2019. And I have to file my next return of income showing this capital gain in the return filed immediately next year, that is in July. Say July 31st is my due date for filing the return of income. And I'm not able to either buy or construct a house within this period, that is December to July. Then in that case, before 31st July, I have to deposit this amount of capital gain in the capital gain deposit account scheme. Suppose I am not able to use the entire amount of deposit made for the purpose of reinvestment, then what happens? Okay. If the deposited amount is not utilized within the specified period, that is 2 years for purchase and 3 years for construction, in that case, the amount that is not utilized will be treated as the income of the year in which period of 3 years expire. Say for example, my capital gains was 30 lakh rupees and I have invested or deposited this entire 30 lakh rupees in a capital gain deposit scheme. But within a period of 2 years, 3 years, the amount of reinvestment made by me is only 25 lakh rupees. That is, I have purchased a new house for only 25 lakh rupees. So balance 5 lakh rupees will be brought to tax in the year in which the period of 3 years expire. However, there is a restriction with regard to the claiming the benefit of this exemption. That is, the new house which is acquired should not be sold for a period of 3 years at least. In case the house is sold before this period of 3 years expires, then there is a slight change in the method of computing capital gain of the new house. Generally, capital gain would be computed by taking the sale consideration and reducing the cost of acquisition. And in this case, when the new house is sold within a period of 3 years, the cost of acquisition will be actual cost as reduced by the amount of capital gain that was claimed as exempt earlier. Now, for example, I derive a capital gain of 30 lakhs by selling a house. Now, I use this entire 30 lakhs in acquiring a new house. So I don't pay any capital gains. Okay. Now, after 2 years, that is before 3 years, I sell this new house for a sum of 50 lakhs. So normally my capital gain of the new house would be 50 lakhs minus 30 lakhs. But in this case, cost of acquisition of the new house would be 30 lakhs minus the amount of capital gain that I have claimed as exempt, that is 30 lakhs. So 30 lakhs minus 30 lakhs, that is cost of acquisition would be 0 and entire 50 lakhs would be brought to tax as capital gain of the new house. In other words, whatever the exemption I have claimed earlier, I had enjoyed earlier, will be withdrawn and that amount would be taxed in the year in which this new asset is sold. Yes, friends, that's what I had in this video. In case you have any queries or doubt, please leave a comment. Thank you.